Howdy, folks. Welcome back. It is the weekly wrap up for Friday, September 16th, 2022. I apologize for missing a few days. My tummy's been a little under the weather, so I've been taking some medication, which unfortunately makes me feel worse than, or not quite as worse, but doesn't make me feel very good either. So, anyways, this today we're going to go through the indexes for today and the week. Go through the economic data and the market recap for today. So we're going to keep this more brief than normal, but not the greatest week in the markets, unfortunately. So if it's your first time watching, please give me a big old like, thumbs, share, subscribe, all that good stuff. Smash the like button, hit the alerts. That would be great too. All right, well, let's go ahead and jump into the see how the numbers did today. The Dow Jones was down 0.45% or 139. It was down a lot worse than that earlier today. Closed out at 3822. The S&P 500 was down 0.75%, closed it at 3872. NASDAQ down 0.9, closed at 11488. Small caps are down 1.66. The VIX actually is finishing slightly in the red, which is a little bit surprising, down 0.15. The VIX is currently up at 26.23. It was up in the 27 range earlier today. Moving over to Canada, they were down 0.89. Brazil down 0.7. Mexico up 0.05, so basically flat. Jumping across to Europe, Germany was down 1.66. UK down 0.62. France down 1.31. The Euro stocks down 1.17. Netherlands down 1.47. Let's see here. Spain down 1.25. Italy down 1.14. Switzerland down 1.27. And Portugal down 1.16. Both Russian exchanges were down today. The MOEX down 0.47, while the RTSI was down 1.01%. And in the Asian markets, Japan was down 1.11. Australia down 1.52. New Zealand down 1.73. In China, the Shanghai down 2.3. Same with the SCSE component. The China A50 down 2.14. The DJ Shanghai down 2.4, and the Hang Seng down 0.89. And the Taiwan weighted came in down 0.74 for today. So again, not ideal, but hey, these things do happen. So let's go ahead and look and see how the markets did for the week. The Dow finished off down about 4.22. The S&P 500 is going to finish off down about 5.15. NASDAQ down about 6.37. The Dow Utilities finished down about 3.56. And the Dow Transports finished off the week down about 9.36% down. So not an ideal week there. So unfortunately, it's been a little rough this week. So again, not really surprising if you've been paying attention. So all right, well, let's go ahead and look at the economic data for the week. Jobless claims came in at 213,000, below forecast, which was 226. So it looks like it has kind of trimmed down a little bit. We'd gotten into the mid 200s a month or so back, and it looks like it's coming back down a little bit. So that's some good news. Continuing claims came in at 1.403 million. Forecast was 1.475. So again, another bright spot here in the economy. The consumer price index, covered this earlier in the week, came in at 8.3. The forecast was 8.1. So a bit over forecast, but if you look here at the chart, it is trending down. So it is kind of a mixed bag. Inflation did increase, but it has slowed down. So it's kind of a good news, bad news situation. The producer price index came in at 8.7, slightly below the forecast of 8.8. And again, looking here at the chart, it is falling, which is some good news, but we're not seeing any negative months at this point. So kind of is what it is. Retail sales year over year came in at a 9.1%. Last month was 10.06. So again, looking at the trend line, it is looks like it's kind of holding steady right now. So again, I'll take that as good news. And industrial production year over year came in at 3.68. Last month was 3.81. So it trending down a little bit from last month. And consumer sentiment came in at a 59.5. The forecast was a 60. So it did increase from last month from a 58.2 to a 59.5, but did come in under the forecast. So not great, unfortunately. All right, well, let's go ahead and blaze through today's market recap, and I can let you guys get back to your day. So S&P 500 slips as FedEx profit warning triggers fresh global growth worries. Not good. The S&P 500 fell Friday, led by FedEx induced plunge as industrials after the shipments company profit warning triggered fresh worries about the global economy ahead of an expected Federal Reserve rate hike next week. Industrials fell more than 2% to lead the broader market lower, pressured by more than a 20% plunge in FedEx after it pulled its guidance on slowing global growth that will hurt shipping volumes. The profit warning triggered a wave of downgrades on Wall Street, with Goldman Sachs cutting its price target on the stock to $20 from $23, anticipating earnings to weaken in the coming quarters. Other transport asset-based transports are also expected to face, quote, tough margin-related headwinds and or elevated earnings per share risk, end quote. Goldman Sachs added, as the global economy moves into a deeper potential of economic slowdown. As far as companies, UPS, XPO Logistics, and GXO Logistics were sharply lower, with the latter down more than 10%. GE was also a big drag on industrials after falling more than 4% as the company flagged ongoing supply chain issues that are expected to continue not only to hamper product deliveries, but also weigh on cash flow. Energy, meanwhile, moved further into the red for the week, pressured by weaker oil prices as global growth concerns continue to keep worries about fuel demand front and center at a time when the U.S. is expected to release more petroleum from its strategic reserves. And actually, let me jump over back to the stock market, looking at commodities. Looks like crude was up slightly for today. It was natural gas that was the big laggard there. So, but anyways. All right, where were we? Earlier in the week, the International Energy Agency said that about 52 million barrels of additional oil will be supplied from strategic reserves in September and October. Quote, the medium-term risks to the crude oil price therefore continue to point to the downside, end quote, Commerce Bank said in a note. In tech, meanwhile, Adobe Systems Incorporated slipped more than 4% after a slew of Wall Street analysts downgraded the stock on concerns that the software company's deal to acquire Figma could weigh on earnings growth. The bigger swing in the broader market comes just ahead of the Fed's monetary policy decision due next week. The central bank will likely lift interest rates by 0.75% and deliver hawkish guidance on future hikes. Quote, we expect the FOMC to deliver a third 75 basis point rate hike at its September meeting and upwardly revise the median path for policy to peak rate of 4.1% by the end of 23 as it contemplates a longer tightening cycle with higher peak rates, Morgan Stanley said. All right. Well, that is everything I had for today. If anyone needs anything from me, please go to dsafinancialgroup.com. All my contact information is there. And hope everyone has a fantastic weekend. And I'll talk to you guys on Monday. Adios, folks.